The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
Well, we've had kind of a little bit of war out here between the bears and the bulls. A little bearish at the open. Everybody decided they had to go try to buy the dips. And they did for a while, up about 10 points on the S&P cash. That rolled over pretty hard when the NASDAQ and the S&P went below zero. Got to about -10 on the S&P cash and a little over 100 down on the Dow. And we're kind of coming up here a little bit. Options over the weekend continue to point that we're going to probably at least test 2,800 on the S&P cash. And I don't know if there's a whole lot to say other than that, but the volume at the open, all the way to 11 o'clock, I think we'd only done something like not even 1.4 billion shares. It was close. On the pullback, we had more volume. It got a little light, and we've bounced, but we're at about 3.66 billion shares on the CBOE U.S. market. U.S. market volume summary. So is it a slam dunk? The answer is no. Am I looking for the end of the world? No. I'm just looking for 2,800. I think we get that this week. There seems to be a lot of games going on that I'm watching in the option market, which is interesting. Been talking to Steve Rhodes. I actually sent him a spreadsheet with the numbers I had for the one-day rate of change in the VIX, and what happens when that doesn't work. It's got a fairly decent batting average, but my question is always, it's what happens if it fails? You know, if you remain short, would you retire? You know, is it the end of the world? What happens when things don't work correctly? I heard Basil talking about writing software, and I made a comment about edge cases, and that is where a lot of things just don't work the way you think they work. 90% of the time they do. But what happens on that last 10%? If you could find a way to figure out why those or why the market went down, the VIX flipped higher another 10% the day after it had already gone up at least 10%, what would that tell you? Anyway, I made a spreadsheet and sent it to him. Maybe he'll comment more on it. If you want that spreadsheet or the data, just email me at path@tfnn.com. It's kind of a work in progress. I just think it's something fairly interesting to look at, and that is, yeah, can you make money hitting singles and doubles? And the answer is yes. What's the key to hitting a home run? What's the key after one of those big moves to know that, you know, it's one of these times in the last, I don't know, 5,000 trading days. And that was the day that you could have cleaned up. You could have hit the home run in the 7th game of the World Series and retired. So what is that edge case that's out there? Anyway, I did all that. It wasn't that tough. I thought it would be a lot tougher. I looked at the data before and the one-day rate of change, but what about 2 days? What about 3 days when the market keeps going? What is the signals when we go back and look at the charts? So if you want to go back and look at the dates, I've actually separated those all out and the spreadsheet too, so you can just go by and off times in the market when it happened and see. Maybe there's a little bit. It's very interesting and a wonderful discovery by Mr. Steve Rhodes. Is there any way to make it a little better? Yeah, I'm one of those guys, a programmer, an engineer. What do we do? When you ask us what time it is, we tell you how to build a clock. Yes, we're that kind. That ain't the question, Polar. What is the question? Oh, striking out with the bases loaded. Doesn't matter. You know, it's one of those things. There is that you don't win. You could come in second in the Daytona 500, and you'll make $1.5 million. But you come in first, and you make $15 million. So is it worth throwing away a $250,000 race car for the opportunity to get that much more? And occasionally, that's what it is. Your odds aren't good, but is it an asymmetrical bet? Is the bet so good at certain times, not all the time, but could you go back there and find something, a little diamond in the rough out there at looking that data? You can use it daily as you always have, but maybe there's a little tell out there that tells you when to push all your chips into the center of the table. Just a thought, just a thought. Anyway, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And what else can we do out here? We can just wait as we see what's happening out here. We're just off 3 points in the S&P cash, up 7 points on the NASDAQ. It is expiration week. It is exceedingly rare to see a down expiration week, but I think that's what we're going to see. We're going to do a little history. Then we're going to come back and talk about more about outliers and some other, and fat tails. And I'm not talking about whoppers that I tell. I'm talking about something in statistics.
And it's all just a little bit of history repeating.
On this day in 1961, shortly after midnight, East German soldiers began laying down barbed wire and bricks as a barrier between the Soviet-controlled East Berlin and the democratic western section of the city. And of course, I think I said that my dad was entered the Air Force. Actually, was the first Air Force officer ever commissioned, because that's when they split the Army Air Corps into a separate division of the Air Force. He just happened to be first in line for that. Just the luck of the draw, but first commissioned Air Force officer. And of course, a couple of years after he got in 1948, they'd sent him to Germany in Wiesbaden, an air base down there, and his job was to fly around CIA guys, but it wasn't CIA then, in the back of B-17s, B-25s, all this stuff, and map out their radar in case things went south. Of course, he had to come back, or he was sent back, I think back early at this time, 1961, for a little while. Anyway, we'll be back after this talk.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're going to talk a little bit more about fat tails in the market. If you're not into statistics and finance, you probably don't hear a lot about fat tails. You may hear some occasional people talking about it, especially in options. But there's a kind of an expectation of a move in the market. And the best way to show this is a little passage out of Nassim Taleb's book, Fooled by Randomness. In a developed country, a newborn female is expected to die at around 79 years old, according to insurance tables. When she reaches her 79th birthday, her life expectancy, assuming that she's still in typical health, is another 10 years. At the age of 90, she should have another 4.7 years to go. So if you're told a person is older than 100, you can estimate that she is 102.5. And conditionally being older than 140, you can estimate that she's 140 plus a few minutes. The conditional expectation of additional life drops as a person gets older, most of the time. Now, one of the things he left out on this is that if you get to 55, your conditional expectation goes up a great deal if you're a woman in the Western world. And that's because you weren't killed by cancer yet. You weren't killed in a drunk driving accident when you were 18. You've made it through most of the things that will kill you fairly quickly at a young age. And now you're into the part where you've kind of dodged all the bullets in your life. So you get to 55 and you get another 15 years of conditional expectation just because the people that died in their 18s or died in when they were a child or even younger are out. Now, fat tails are a little different, and that is, especially when that happens, and that's during options expiration. If the market's going higher, it almost always falls in line with expectations. Where it doesn't, and you get this about once or twice a year, is when the market heads down during options expiration. The reason is everybody is not set up for the move into options expiration correctly. And that can cause some huge problems. It causes fat tails. That means that as people get older, kind of like if you hit 55, your expectation for your life actually goes higher. And those fat tails are what make many of the managers on Wall Street not have any sleep, because when things get rough, and everybody that's been around the market long enough, unfortunately, that's not a lot of people. That's if you've been around since 2010, you've never been through any big downtrends. And I'm not saying that we're going to get one. I'm just saying that during this week, if the market does go lower, it's not uncommon to go a lot lower than anybody could predict because of these fat tails. You get into really weird correlations in the market that break other correlations. So you get selling that begets selling. You see huge one-day spikes lower. Now, we got a little bit of that on Friday. We got a little bit of that today. But at best, if the market closed exactly where it is right now, I think most people would call it a draw. So we continue to watch this fairly closely. But in down markets, during expiration, do not be surprised to see extreme moves lower. And in fact, we've caught a couple of these where we missed the move lower, but ended up buying options on Friday and cleaning house. And also the other part's true, where you can have the market kind of moving up. It gets into Thursday, and then you get a 20 or 30 point drop. But guess what? Options are a quarter, and you walk away for $4. That can be an entire year's worth of percentages as a normal trader. And kind of, again, I'm looking for those edge cases where I can spend a little and make a lot. Does option market positioning set a very side price range? I don't understand that. Does option market positioning suggest a very side price range at options expiration? Very wide. It basically shows that probably about 28.20 is kind of the high, and you could go all the way down to 27.50. The center point is somewhere around 2,800. So that's where I'm saying that right now that you wouldn't have to go very much lower, maybe another 10 points, and you get into the highest part of the expected range from Friday. Now that range can change, and does every day, so you have to watch it. A lot of times it doesn't move at all, and then the option market makers think that it's right on. They think it's going to be 2,800. So I'll watch the options tonight. I normally download the data at night and look at it first thing in the morning, about 6:30. But you look at it and you look at a lot of other charts. You just don't look at the S&P. I look at a lot of the big name stocks out there and see whether or not there is an opportunity for lower prices. And a lot of them just show, that we could move, that they could go down 3, 4, 5% before the end of the week. And you kind of half that because they kind of meet in the middle, and you just go on with it. So right now I'm looking for at least a test of 2,800 before the end of the week, which isn't 30 points over that. That happens a lot of times in a matter of minutes over the last few years. So 30 points down wouldn't be a big deal. If we get some kind of signal that that's the bottom, then maybe I could buy some calls for Friday. Maybe that happens on Wednesday or Thursday. And maybe we get a little bounce, but of course, probably a big bounce if we continue to crush calls the rest of the week. But like I said, we're just kind of hamming around here. There wasn't a lot of volume up. There's more volume down, and even on Friday we had more volume, so it continues in it. Anyway, fat tails is one of those things that is exacerbated during options expiration, mostly because everybody is hedged. And when everybody's hedged, no one is. Maybe that's the best way to describe it. As I said before, I think I brought it up last week, there's a good book called Iceberg Risk, and it goes through the math of when everybody is hedged, no one is. And there is kind of a weird dichotomy that everybody thinks they're hedged. But guess what? You know, you're in that ETF and that ETF blows up. Well, you're not hedged anymore, are you? But everybody was hedged. And of course, it blew up in your face, and literally nobody's hedged. So there's always that kind of thing where there's a run. And what did we see that one from Deutsche Bank last year or the year before when that blew up? Was it last year on the SVXY, when that all blew up? So you never know. Just keep an eye on it. But I am looking and thinking that this week may see some fat tails. When we get back, we'll look at some charts. Give me a call, 877-927-6648. Email me at path@tfnn.com or put a note in the den.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And somebody asked in the den, so I'll go ahead and show it. But this is what the S&P expiration looks like for the spiders on the 17th, which is expiration. So the most amount of people will lose the most amount of money based on Friday's closing prices on options at about 278. Now, you want to always put in a little fudge factor of about 20 to 40, depending on how short the market is, 2 to 4 on the spiders. So right now, there weren't a lot of people short. In fact, a lot of the biggest stocks, there was a lot of, we talked about it on Friday, a lot of the small cap and medium cap stocks that are insanely hated with 27 days to cover. But those are such a small part of the overall market. When you really look at the S&P 500 and you look at the big stocks in the NASDAQ, and there's a handful of them that are heavily shorted, but fairly light and fairly, and actually the amount of money bet on the downside in the S&P 500 and the spiders fairly light this expiration cycle. So not a lot of people are looking for higher or lower, and that's it. So this is kind of it. I'm just assuming that maybe 2,800 is kind of where resistance or support is going to be on the downside, but it's certainly, you know, if you get into the part of it, you could actually see 2760 would still be in the range of what those charts look like. Okay, what else do we have? One of the other things I wanted to bring up, since no one brought it up last week, I put it in the newsletter this morning, but how many people are talking about candlestick patterns, Japanese candlestick patterns, and missed one of the, at least in my opinion, one of the biggest signals last week, and that was Tuesday, Wednesday, Friday, a tri-star doji pattern in those indexes. Go back and take a look at that. That, to me, you don't see a great deal of these, certainly not in the indexes. You see more of these in individual stocks, but a lot of times the stocks weren't moving higher or lower at the time. But we had a fairly nice tri-star doji setting up before we moved lower on Friday. So that was another thing. Anyway, we're back to almost flat on the S&P cash. NASDAQ's up 13 points. Okay. And let's get into some charts here. Okay. What else do we have? Let's take a quick look at Apple. Apple was the most interesting stock to me today because at one point I saw some data come across that showed that 90% of all the gains in the S&P and the NASDAQ at around 10:30 or 11 or so, 90% of them were two stocks, Amazon and Apple. Literally, the entire market was up on two stocks. If you took it away, the S&P would have been down, instead of being up at 10 points at that time, would have been down 12 points at that time. And I thought that was absolutely amazing to see that the market is actually a 500 stock index like the S&P 500 can be so overweighted in individual stocks by caps. And of course, you're looking at both of those stocks come up here. You did spike higher today to 210.95. You really didn't break out. We'll look at the volume at the end of the day out here. But to me, I still look at the news flow and still think that it would not be surprising to see $5 or $10 lower on Apple by the end of the week. It gives a lot of signals that, to me anyway, that there could be problems coming. Let's take a quick look at Amazon too. Amazon breaking through the July 27th high. It was just under 10 million shares. He had 4.8 million shares on the 9th, 3.6 million shares on the 10th, and today we're a little bit better, about 4.1 million shares. But again, more of a hammer candle out here than anything else. I think these big stocks try to go higher. You know, certainly not going to have the volume of July 27th. And maybe they just hang out at these highs. But I think you're going to need more to see these stocks and the market go higher. This is about the fourth rally attempt, I think, I've seen today in the market, and all of them have eventually been sold. And the question is, what happens at 230? And we'll see. But again, volume not that exciting in that push higher this morning. And certainly we had one of the few Fridays where volume expanded significantly. So there is some action going on out here, so we'll keep an eye on it. What else did we want to look at? Somebody wanted me to look at Microsoft MSFT. And what do we have? Well, you're back down here. I think Microsoft could get back to 105. I think a lot of people would freak out on that, but that's where support is. I don't think it's that big a deal. Somebody actually emailed me that Nadella, who's the CEO, unloads 30% of his Microsoft common stock in the biggest sale ever as CEO. I think that was on Friday night or over the weekend. Of course, tomorrow morning we get Home Depot. And Tamara asked me, Tamar asked me, with the recent data in real estate and downward movement in Redfin earnings, what's your take on Home Depot? Rarely play earnings, but I'm thinking about taking a very small position in the at the money puts in Home Depot. I'm not a big fan of going at the money options. You want to go out of the money and expect a huge move, and then you're going to make it back. And you have to be kind of like me. You have to be willing to be right 50% of the time. And, you know, maybe you go through 4 or 5 trades, but you get 8 to 1 or 10 to 1 on one of those trades. And then the math works out lovely. I think Home Depot has the ability to go and break back into the 180s. I think I looked at the options on that Friday or over the weekend, and none of them looked that juicy to me. They were a little expensive to think that no one was expecting a gap down. It does look like there's a handful of people. So I don't see the option move, and I don't see the risk reward going short the actual equity. I think that if you were feeling bearish, I think you probably missed to pull the trigger a couple of days ago. I wouldn't have minded you shorting this thing at 199. I do see that this thing could be in a fairly significant expansion. And if you look at the ABC on this one, it takes you to 189.04 on the 1-to-1. I wouldn't be surprised that it's in that. I've been in a few of them over the last couple of weeks, and they've been rather vacant when they've been just mob houses for the last few years. So summer in Florida, maybe that's part of it. Back to school, maybe. But both Home Depot and Lowe's seem rather...
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And what was it? Oh, thanks, Bill in the Den, for the article on the gray swans. I'm going to find it during the next break. But a lot of people like those charts with what they call the fat tails. I like the sombrero, sometimes called the Mexican hat. And I'll find a picture of it during the break before the last segment, because I think that kind of actually is more symbolic to me about how you think you're almost down to where the point the market has to bounce, and you actually end up seeing additional volatility that you thought that just couldn't be in the market. I want to thank, I think that was Fletch that sent me that article about Satya Nadella selling his Microsoft shares. Like I said, I wouldn't be surprised to see it back at 105 before the end of the week. Right now, I think a lot of people are ignoring a lot of the stuff that kind of whistling past the graveyard, but we shall see what else is going on. Question to look at the TLT. To me, I don't know any way that the TLT could actually trade like this unless it's being hugely manipulated. Either the bulls right or the bears are right on bonds. But I can't see an article where I can't see a argument where neither of them are right. To me, this kind of smacks of a great deal of intervention. I kept on thinking this thing was going to get back to 115, and the way it looks now, my best call would be that it gaps down there. I think, we've got a lot going on here. In fact, what was the, let's take a look at the dollar. Dollar was lower. Thought a lot of people thought that, and I heard them this morning all chanting it was going lower. It's basically flat on the day at 96.22 for the DXU8. And if you need a link to the dollar index, just give me an email at path@tfnn.com. I've got a fairly good web address where you can get one that's free and get an idea and actually look at the charts of the day. So what else do we have? Well, anyway, when I was looking at that, of course, you have to go back and take a look at the GLD. There was a very small window where I saw a chart that looked fairly decent in gold, and that was when it was going through this 117.40 level on from December 12th, 2017. And yeah, you got a little bounce out of it for a handful of days, and then it came back down. And then there was kind of one other point where, man, you could be long the thing for about maybe the afternoon. And by the end of the afternoon, you already figured out this thing was ready to fail again. This was back in about the 20th of July. We just keep going down. Now, this is one more gap. And one of the things I'll be looking for, because this is now a 3-gap play on potentially on gold. Your first gap is on the GLD is at 128. The next one's 124, 123 to 122. And now you got almost a similar sized one out here from about 113.75 to 115. So you've got 3 nice gaps out here, at least in the GLD. The question is whether or not you can find some kind of low. And I wish I heard a lot of people screaming about gold and everything. Maybe we'll hear it in conversations later in the day, because that's generally where good lows come from in gold, when there's blood running in the street. But I really haven't heard that many people. And that makes me think that at least today's not the day. Maybe if I turn the TV on tonight and hear nothing but gold is an ugly yellow metal, maybe that'll change my sentiment a bit on it. But right now, dollar holding steady in the low 96s, retest of 96 earlier in the day. Now you're back up here. I don't see any kind of signal yet that says that gold has made it. And, one of the best signals in gold is about a $50 drop in the day, a huge gap down that lasts most of the day and then gets filled by the end of the day. And, when you get that kind of massive washout, and right here, this looks okay. But again, every time I've waited for the massive washout, I've been rewarded massively. And I'm not feeling like enough people are screaming yet. When we hear that gold is no more, almost always a good time to buy gold. And of course, my favorite is Jim Grant, who says it's important to buy gold, but more important to sell it, which is always my favorite story on that. Okay, well, we're off 4 points on the S&P cash. NASDAQ's up about 4. They were able to push this thing up again. No volume in the last push from down 10 on the S&P. But for the most part, you can look at these charts during the day. It's the last 30 minutes that are the most important. So we'll keep an eye on that. What else do we have? Got some other emails here. So where's my email? Guess I closed it accidentally. How much time have I got? 2 minutes. Okay, someone wants me to look at Netflix NFLX. Let's take a look at this. Could Netflix be making a low out here? And the answer is always it could be. The better question, and maybe this is where I differ from a lot of people, is where would I want to buy this so that I made the most amount of money and didn't really care whether or not I made some short money now. I actually wish that I wanted to make a lot of money maybe later. And it's these double gaps at 300. My guess is that Netflix is heading that way. What do we have today? 5.5 million shares compared to 4.3 million shares Friday. So you are lower, even though you closed open lower and up a bit on it. I would say the first opportunity is 328, but I would, just being after this thing, it's gone from 423. I would love to see this thing gap back down and fill that gap at 300 and then go sideways for a while, consolidate, and then make that sign, because now you've got 300 to 340, and a possibly 300 to 380, probably 390, which is where that gap is. And I wouldn't be surprised to see this hit 300, go to 390, and then if it's going to have major problems, continue on the road down. But until it tests 300, gets there on lights volume, consolidates, and has a better day, I still have problems out there with it. What else do people want to be looking at today? I got a question to look back again at these turkey stocks, see what's going on in them. I'll look for that Mexican sombrero or the Mexican hat. But we'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we were talking about fat tails. I saw this and got explained about fat tails kind of a different way than most other people, but I always love this sombrero or Mexican hat function that people show. And the idea is that, you know, at any one time, if the market's balanced, you can go all the way back down to the actual bottom of the bowl out here for expectation, either higher or lower. But normally you would get down to the bottom of that the bottom of the bowl and you go, okay, this market can only go 1% lower. And then you actually make it through that level and you find out that actually the market is broken and you can get, another 50% of the move from the top that you thought, either on the high end or the low end. And you saw the high end all the way to the right in the .com bust, and of course at the highs, and you saw it go all the way back, all the way down to the other side at the bottom in 2003, where no one thought it could go, with the S&P down at the very ends. Markets, you think that the bottom of the bowl is all it is. Well, that ball can roll up the sides and drive you insane. But if you look at it as a function, I know it's hard to explain math over one of these shows, but I like this interpretation better than the fat tails, because it just looks like you just kind of go a little lower in the standard bell type diagram. This one, you see the volatility as a function. Well, if you're at the top, there's a long way to go down. If you're at the bottom, there's a long way to go up. But when you get to the bottom and you think it's the bottom, could their bottom be actually another 50% lower? Well, in the markets, that's the fat tail. And it's not just me making up a story. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Big Bat Channel, same bat time.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.